Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
I want to start with Happy New Year to
Happy
everybody.
New Year! Yay!
So we're filming this video January 1st.
Yes.
It's New Year's Day. This will come out the morning of the 2nd. Our New Year's resolution for the videos is to make shorter videos.
Yes, please.
Okay. The boss said that videos need to be shorter, so we're going to do that. You used to have to listen to us ramble for 20 or 30 minutes. We're hoping that you'll only have to listen to us ramble 5 or 10 minutes.
Oh, I would love that.
Okay. All right. So we're going to start off. We're going to jump right in. This is an update, beginning of January, Las Vegas real estate market.
So wait a minute. If you're interested in the Las Vegas real estate market, please subscribe, hit the notification bell, like the video, share the video. Let's go.
Okay. So market action index, this is that needle that sort of generically takes in all the data and tells us where we are. It's at 32. Mm-hmm. It's been 32 for like 4 months, between 33 and 32 for 4 months.
We think it's stuck. We think it's broken.
It might be broken. We might have to tap. You might have to tap on it on your screen to get it to move. It doesn't look like we'll go through the data, but it hasn't gotten worse. That's the interesting thing. It says slight seller's market, but who knows? Okay, now what we've done is we've taken the market action index and we've broken it down by the 4 price quartiles of the market. The top, the second, third, and fourth.
Okay, pay attention because this is not intuitive as to which is which.
Okay, the blue line on the bottom is the top quarter of the market. Okay, and the red line is the bottom quarter, so it's upside down by price, but this is how hot the market was. What this chart shows you is the blue part of the market is performing the worst. If you look all the way to the right, it's the lowest. And at the hot part of the market, which was the spring of 2021 and 2022, the hottest part of the market was really the top half. So it was, or the bottom half of the market. So it was the lower end properties. So basically below $500,000 was flying off the shelves. Above 500, not so much.
Right.
Okay, so we just wanted to point that out, that because people are commenting about, oh, in my market, things aren't going good. But if your market are $1 million homes in Summerlin, that's a bad area to be in for.
Right. And then remember, real estate is hyper-local, so your market, even one neighborhood over, like literally one cross street over, could be a whole different story. So please keep that in mind.
Okay, median list price is the next chart here. As you could see, it's dropped. It's still about where it was about 13 months ago. So what's interesting is that little dashed line leading indicator. Now, if you go to the very bottom, it says the bottom of this chart isn't 0, it's 300,000. So it looks like a percentage-wise this dropped a lot, but that's misleading because the bottom of the chart's 300. If you go to 0, this has only really dropped about 8%. We're going to show you, though, on the next slide why that's important, okay? The other cool thing is the 7-day leading indicator is starting to catch up. It's just a couple $1,000s away. What this means is that list prices are starting to level off, and we'll see if this flips. It does every year. It tends to flip and list prices go up. Okay, this is the important one. This is median list price by property value.
Okay.
The top line, the blue line, are the high-end properties. What you notice here is the market that took the haircut are top and high-end properties.
So if you were 500 or below, you're pretty much okay. If you're 500 above, the higher you get over 500, the more trepidation you might have about the market.
Yeah, we had somebody who commented saying, "Oh, well, I'm in Summerlin, and in our area it's really bad." Well, yeah, if you bought an $800,000 house for $1 million, you're in a tough situation. Everybody else is fine though. If you'd have bought $300,000 investment properties, you'd been much better off than spending your one amount of money on one high-end house.
Right, because if you bought a house for $1 million, you're getting $3,000, $3,500 in rent. That same $1 million could have bought you 3 houses, which would get you $6,000 to $7,000 in rent cumulatively. And if one of them is vacant, you're still getting $4,000 or $5,000 in rent. However, if your one house is vacant, you're getting nothing. So that's why it makes more sense to stick to a lower price point if you've got a good chunk of money rather than buying one big property.
This is the inventory chart. The most important thing about this is it did get high. And a lot of this was because interest rates were high. And the second thing is a lot of people panic sold and threw their houses on the market because they were afraid. But look what's happening now. It's not only been declining, it's actually has declined 35% from the peak. That's that dashed line. That's the actual number of inventory. The reason why it still shows higher on the solid line, this is a 90-day average. Mm-hmm. But you can see inventories dropping rapidly. It went from 3,700 to 2,400 just in the city of Las Vegas. Of course, it's more in the whole metro area. It's dropped substantially.
Right.
Inventory, and it will continue to drop probably until April, May.
It'll start coming up a little bit before then, but yes.
Okay. All right. Next chart, average days on the market. We broke this out based on property prices. The blue line is the high-end properties. So in the other three lines are all together there. Yes, the average days on the market is rising, but if you look back to the left, you can see it's still historically not completely out of line. We had somebody on the video say, no, there's 9 months of inventory in Las Vegas.
Well, according to the data from the title companies, it's 5 months.
It's 5 months of data.
Normal, it's 6 months. So we're right about what a normal market should be.
And here's the thing. We have sales are down 30%. And historically, we're below the average number of sales. And it's still only, that's the thing. It's still only 5 months of inventory. And we're historically have extremely low number of sales. We should have 9 months, but we don't. We have 5 months. Okay. This is another one I wanted to point out. This is the number of properties with price decreases because people keep talking about, oh, list prices are falling. But if you look at this chart, that's leveled off and has changed. The number of properties with price decreases has started to decline, and the leading indicator is declining too.
Right. So part of the reason why the price the price declines are leveling off is because people are coming to grips with the new reality that the froth is gone and we need to get real with pricing properties. Yeah,
people were overpricing their properties and they're not doing that. What's more accurate to what home prices are doing are the price per square foot. Now here's the price per square foot chart. Same thing here. The bottom of this chart is not 0, it's 150. So as a percentage, this is only off by about 8 to 9%. The other interesting thing is that solid line and that dashed line, the 30 and or the 90 and 7-day average is very close. It's just a couple dollars apart. This tends to flip in February. So we're going to see this thing flip. Now that doesn't mean prices will go up, but prices certainly it's unlikely they would continue to drop at a significant rate. So what the data shows is the market is moderating. It's adjusting. Where the market was the worst, where you probably made the worst deal is if you came to Vegas with $1 million and said, what should I do? And someone said, you should buy a $1 million house in Summerlin. And now the house is worth 800. That was a mistake. If you had bought other houses in different parts of town, you would be
Well, if you had bought multiple houses with the same amount of money, that would have been a better move.
Multiple houses with the same amount of money. And we're talking about investment properties. We're not saying, if you came here to live, you just bought where you wanted to be.
Well, and if you came here to live and you bought your house and you're happy with your house, it doesn't really matter what it's worth because the only time that it matters what it's worth is when you buy it and when you sell it. The in-between is just noise.
Okay, last thing before we sign off.
Yes.
Is a percentage of people who are upside down, it's really only people who bought over a certain number of month period in the spring. It's a percentage of the whole market. It's not very much. We're talking a couple percent.
Yeah, if that, because remember, we're dealing with 400,000 homes in Vegas, and how many of them actually transacted during that period of time? As a percentage, very few.
And if any, those people aren't just going to put the house on the market and sell it and say, I'll just realize that, $100,000 loss or whatever.
It doesn't make any sense. I mean, for most people, they're in it for the long haul because real estate is a long game. Yeah,
we're gonna follow this trend, of course. If you have any comments, you can leave them under the video. Share the video, like the video, subscribe to the channel, and what else?
And tell us where you're watching from. We always like to know where you are, and tell us what's happening in your market. See you on the next video. Bye.
Bye.